Hey everyone, happy Sunday. As promised, I said I would do a short clip on DocuSign and how I approach a short like this, key triggers and things that I look for on a much wider scale and time frame. So anyone that knows me and follows me knows I usually go pretty far out, yearly, quarterly, monthly, weekly, and then down to the daily. Obviously with that COVID variant, a lot of the reopening names started taking some hits. So Zoom was one of my top short picks from the week prior. And then we had DocuSign on radar this week for another short setup. Lots of things that led into it. So on a wider time frame, it was definitely starting to look quite bearish. So I was looking more so at the monthly chart. Typically you can see when you start to revert. So as this is kind of spreading out wide, I like looking back and seeing something similar to what I saw with Zoom. So in terms of a monthly pattern, my 3-bar down reversals are something that I really, really like. So this was the one that we saw there with Zoom on the quarterly. And then the weekly just had a complete continuation down until it finally started hitting some monthly and quarterly support levels. DocuSign, same thing. But I'm going to show you exactly how and when I knew that the timing of this trade was definitely headed more towards the short direction. So I like looking back at past patterns too. So patterns where something could have formed to the downside. So right back in here from March all the way through till May. And then you can kind of see how it reverted back up, kept the trend. And then now we formed another 3-bar potential downside reversal. Okay, so for me, what's important to me is where are we opening, where are we closing, not so much the patterns, it's more so the levels and the timing of when we're forming them. So for instance, if I'm looking at my past 3-bar down, well, I want to see if it's holding off of these key levels. So the top level there being 246.11, right? What kind of happened the last time we broke this range? And you can really see here, the last time this was broken, you see how it kind of channeled in between that 246.11 and 233.37 right before it finally engulfed. So like right in here, this is it kind of breaking through that channel. It kind of stopped right there over 233.37. This is when it finally broke. So this was the big upside reversal here where I call it a candle fill. So it's back testing, it holds, and then you get this really nice clean run. So heading into this past week, you can kind of see here. So back October 4th, you see how it back tested and it held by not very much, just a few pennies. And then tried retesting again, reverted back up, failed some of these mid marks, came right back to back test it here. And you can see on November 22nd, this was starting to retest the same zone again. So the 22nd of November, right back down in here. So that's when it was starting to be at major risk before earnings. And then you can see what happened here. This is its first time opening and gapping lower below that range. And you see how it stalled right at that 233.37, right? A few pennies below, similar to Zoom at 233.33. That to me looks pretty bearish. And then we form this really, really nice daily 3-bar reversal down right at key support. Okay, so this is a very, very major support zone. This is the first candle. So this is the day of earnings before they reported. This is the first candle when they actually had breached and closed below 233.37 and actually engulfed down. So you remember how back in here, how it had that really nice engulfing candle up right here, how it just kind of bursted through that 246.57. This is the same, but on the downside. Okay, so they had earnings on December 2nd after the bell. This is December 2nd after the bell. This is December 1st. So these were all your clue triggers. So as early as November 23rd, you knew that this thing was at major risk of this downside. This is a perfect daily 3-bar down reversal. And then the monthly was just formed so beautifully, right? So these are all the key spots. I usually, when I look for reversals down like this, on a quarterly chart, this was forming a very, very, very beautiful pattern for DocuSign. So I usually like looking to see, well, you know, where did that formation initially start, right? And our formations initially had started on this, you know, big upside trend reversal here was back in as early as March from last year, right? Right into COVID. And then we had those double red months in September, October, and then continuation tried going back up November, December, January until it kind of tried reverting. This is where it was held. So you knew as soon as it kind of breached back in between these levels, it was going down to at the very least 224.03 and then that bottom range of 179.49. And from there, that's where you can usually start gauging the bottom end of the support. And I'll show you one way of doing that. This is a mathematical approach I use for, you know, trying to calculate the downside of things. So I use obviously the patterns, but I also like looking to see, well, maybe this thing had a much bigger formation on the quarter, which it did, right? So I know that this bar is going to play a huge part, right? And I usually calculate the biggest bar that I can see on there. So kind of like this one right back in here, when it kind of completed down, that's definitely 25% and more on this reversal candle here. So that was another clue, right? Like I said, in Q3, and then this is that full continuation down. It's the same thing from here. So kind of just looking to see this candle. So that candle had opened at $90.82 and closed at 172.21. So if you're opening at 90.82 and closing at 172.21, I just want to see what that midpoint of this candle is, just to kind of give me an idea. Usually they end up aligning with the formation down. So a quarter of that is $20.35, right? So 81.39 is that full formation on that candle. If I were to subtract that from my 172.21, that would give me my 25% mark. So I know that it's if it hits 151 and breaches, that's pretty bearish, right? So I know that that's seeing a much bigger continued downside reversal. So 20.3475, right? The half mark of that candle would be the difference of that 172.21. I know it's going to have major support at 131.52. Okay. And when I'm looking at that, you can see it on the monthly. So this range right in here, if you guys can see that there, right? This is going to be my massive monthly support. And it's a calculated level too at 131.51. So that's one way of gauging that. Okay. This is on the big downside reversal. So now when you go back to the daily, you can really see how it breached these spots, huge reversal down. Look at where it sits at support. Another way of looking at this is, and I'll clear this out, is I like calculating my actual, instead of looking at the wicks, I like looking at the candle close, right? So like the highest candle open and close, which would have been at 299.80 and 298.04, right? And then where my formation actually had started forming, right? So if my formation had started forming right back down in here at 233.37, right? In terms of the candles opening and closing, that's the highest opening candle on that potential downside reversal. That usually can give me a pretty good idea of just how much I can gauge on this downside. So if it was 299.80, for instance, subtract 233.37, I know I can expect at least a downside reversal move of $66.43 from the bottom of my channel. So if the bottom of my channel, for instance, from the closing sticks and opening sticks is around that 202.45 and 201.62, then I would think that, okay, we could possibly have a downside reversal of $98.18. Okay, from kind of that upper range in here, or the midpoint. So 233.37, for instance. And that kind of nets you a proximity of just how low you could go. 135.19. Strong support from a calculated risk and from an overall monthly, quarterly view based on key opening sticks, key catalysts, major price levels. So hopefully you guys found this helpful. Leave me some feedback and I will try to do more of these videos. Thank you.